I know I say I love dip buying, but here are 3 times where you do not want to dip buy. Take careful notes because you don't want to miss this lesson. Hey, be sure to subscribe on my channel and click that little alert notification bell so you get alerted when I give you more of my wisdom. What's up, Tim Sykes, millionaire mentor and trader, here with a very important lesson because, I always say like dip buy morning panics. I'm gonna actually include a blog post that I think that you should do every single morning, looking for the biggest dips to dip buy, but they have to be a very specific kind of stock in order to dip buy. Ideally a multi-day runner, ideally a supernova, so that when it is crashing, you get the dip buyers who missed out on the run up and they want to catch that dip. It's kind of like a Black Friday sale, like everyone's rushing to take advantage of like the 30, 40, 50% off discount. And short sellers who might have been shorting on the way up and they want to either take profits or cut their losses into that panic. So you have 2 groups of buyers that most likely will make the stock bounce. But what happens if it's not that setup? Number 1, you don't want to just dip buy any random stock, especially if it's not a supernova. If it is just a downtrending stock and let's say they have bad news, it's not necessarily going to bounce. The whole key with the dip buy into the morning panic and the bounce is the fact that it's a hot stock. You're taking advantage of kind of like this flash sale, but the stock has ideally been hot for several days, several weeks. So you have that whole group of people who were watching it, but maybe they were too cowardly and they missed out on the run up, and then they get their chance, they're gonna be itching to buy. But if you just buy a stock that's been downtrending for the past few months and the past few years, and then maybe they have disappointing earnings and the stock is down 40% in the day, that is not a dip buy, okay? Because no one wants to buy it. That's just a bad company. And if the stock is down 30, 40, 50%, oftentimes I say it's a bad sushi chart, especially like, let's say it's a biotech company and they've just been burning cash trying to develop their new drug and the new drug fails and they don't get FDA approval and the stock is down 80%, then it's probably gonna go bankrupt because all the money that they invested in this drug is now wasted. So the stock is down 80% for a reason. That is not a dip buy. Sure, it might bounce a little bit, but I don't want to just be in any random stock that might bounce. I want to be in high odds setups. So I need it to be a supernova. Ideally, I need it to be running for multiple days. Do not just dip buy a stock that has been downtrending and that has bad news. Secondly, don't dip buy a stock that has really bad news, right? Like the CEO just got arrested for fraud, or they just lost their 2 biggest customers. In that case, guess what? The stock deserves to be down. And there's so many pieces of bad news. Maybe this new product that the company is working on, they scrap plans. And so they spent $50 million in research and development over the past 3 years. And then they figured out that the technology just isn't going to work. And the stock is down 50%. And the future of the company is gone, okay? In fact, actually, a lot of the times when you have really bad news, like companies that are basically like, it's going to be sent to the graveyard. Like if the CEO is arrested for fraud, who knows, how much he or she plundered, into the company's like treasury, and maybe the company has no cash whatsoever. It can also be halted when you have really bad news because the company might be bankrupt already and people don't even know. You got to think about the worst case scenarios. When I dip buy a morning panic, I'm just looking to take advantage of a hot stock that is crashing due to stop losses, that's due to profit taking, that's due to market mechanisms. Every now and then I might dip buy a stock with bad news that's still crashing, but it's riskier, okay? If there's bad news, I'm gonna be more conservative in my dip buys. And better yet, if you just want a rule, don't dip buy anything with terrible news like that, like management going to jail, products being scrapped, a company losing its biggest customer or its 2 biggest customers. There's a lot of bad things that these companies do. And remember, most penny stocks go to zero. So you have to kind of think about, going forward, if a company has this potentially devastating news that's going to bankrupt it in the next few years, it's probably not going to bounce. Maybe they don't even have enough cash on their books for the stock to bounce. So be very careful with that. Another time to not dip buy is with toxic financings, okay? A lot of these companies exist solely to enrich the insiders. Either the insiders are gonna sell into the inflated price, so if the stock goes from 1 to 5, after all these press releases, the insiders and the CEO and the directors are selling at 5 and they're like, haha, happy Christmas to my family because now I have more money to spend. Or maybe they're not going to sell. Maybe they're trying to like be with the company, but they're going to do a toxic financing, like I said, at $2 a share instead of $5 a share. And then guess what? They're just going to use the millions of dollars that they raise at $2 a share to pay themselves, either with bonuses or salaries, and they're going to bleed the company dry over the next few years. Sure, they're going to say, no, we're trying to make the company big. This is how you build companies. You have to raise money to build the products. But if you actually held a gun to their head, if you actually went over to the CEO's house and you're like, listen, you liar, you hold a gun, and I'm not advocating violence, but I'm just saying, like, maybe don't hold the gun. Maybe you just inject him with like a truth serum. I don't know if that exists, like in True Lies. Does that exist, a truth serum? Give the CEO a truth serum, right? And then say, what did you do? And the CEO under like truth serum would say, we did a toxic financing and now I'm paying myself gradually over the next 7 years. And I'm not doing insider selling because that would set off red flags with the SEC. I don't know what insiders are doing, but I do know when they do a toxic financing or when there's insider sales, that's a very bad sign. Sometimes offerings can be good. If a stock goes from 1 to 5 and they get the offering done at, let's say, $4.50 a share near the recent highs, that means that the institutional market is willing to bet on the stock going higher. But institutions usually don't want to pay a high price. So a lot of these institutions where they do financings, where they raise, let's say, if they do a toxic financing at $2 a share, they sell 3 million shares at $2 a share, the company raises $6 million with a stock at 5. Why are they only getting the deal done at 2? You have to think about that. And in which case, if they do the toxic financings, all those press releases, all that hype existed to get the stock up so that they could then do a toxic financing at a massive discount, just to lure in the institution so they could raise that $6 million. And this is just a hypothetical example, but you have to know how the game is played, okay? Click some links below. I'm going to include some links to 2 books that you should read. First, my free book, An American Hedge Fund, all about my journey. Second, the complete penny stock course written by my student Jamil, and he basically summarized all my lessons. I wrote the foreword. He watched all my DVDs, all my video lessons, and put them in a book. It's very useful. You need to learn how the game is played. It's not just about picking good companies or bad companies. You have to learn the nuances. Learn when to dip buy, learn when not to dip buy. So these are 3 tips for you. I think they're very useful. You learn when, a good dip buy is. And again, this isn't a perfect science. So sometimes there will be a toxic financing and the stock might still bounce. But again, I'm not worried about any individual instance. I like odds. I want to partake in a strategy where I'm going to win 6 times, 7 times, maybe 8 times out of 10. Not a strategy where I win 1, 2, 3, or 4 times out of 10. That's a low odds strategy. So understand it's not about any one trade. It's 10 trades, 50 trades, 100 trades. And you have to start thinking like that. Take high odds trades. So these examples that I laid out, these are not high odds trades. There are exceptions to the rule, but I want you to think about the majority of the time. Do not dip buy stocks with terrible, terrible news that can crush a company and probably will lead to bankruptcy. Do not dip buy companies that just have, a bad track record and they just keep downtrending. They're probably going to go out of business. And don't dip buy a stock that has a toxic financing because they've just been playing the penny stock pump and dump game, most likely just to enrich themselves, and that probably won't bounce. Leave comments below if this video has been useful. Let's try to get 100 comments, okay? I'm curious to see, because I'll make more video lessons if you think this is useful. I'll stop making video lessons if you don't think this is useful. But do me a favor, click the links below, read those 2 books, and learn how the game is played. I'm also going to include a link for my Millionaire Challenge. That's where I mentor people, okay? It's not about any one pattern or any one stock. I want to teach you everything I learned over the past 20 years. All of my millionaire students have come from my Millionaire Challenge, but if you do apply, be sure to be dedicated. No lazy people allowed. That's today's lesson. Leave a comment. Let me know what you think.